The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you got the Dow down 66. Nasdaq is off 8. S&Ps are off 14.5. And you got a heck of a market out here, folks, because you had a couple equities gapping higher tremendously, too. And the market still couldn't handle it, which is pretty intense. If you haven't test drove the Nadex product yet, folks, come over to our website at TFNN. You're going to see the banner on the top of the side. Hit that banner. You can bring up the account. They'll put $25,000 of paper money into it. You can see how these contracts trade. You've heard the commercial many times that your trade is your stop, and it's absolutely dynamic, particularly in a day like today. Our man, Mr. Darrell Martin, has an outstanding show every Tuesday, Thursday, 1 o'clock, specializing in this platform. Darrell Martin, what's going on?
How's it going, man?
How you doing, man?
Doing good. Been enjoying this volatility. I'm telling you, man, you know it's amazing here, folks, and Darrell, is that this morning, the phenomenon of this morning, folks, was it doesn't happen a lot, and this is what it is. You had Google gapping up, you had Amazon gapping up, you had Biogen gapping up, and we're talking about $20 in a couple of them. And the S&P futures were down basically $20. So I was like, oh, man, there's a disconnect here. So I knew that there's going to be a fight at the open. Bottom line, you had the fight, you had the pop, but guess what, folks? The Bears won, okay? So this is going to be wild watching this whole thing shake out, because what we are going to have at the end of the day, because you got down there, is that on a weekly basis, more than likely you're going to have heavier volume on all these indices as they're pushing into that lower swing point. So as we're talking, let's go over to the S&P right now. If we take a look at the future right now, and we're at 2003. We bring this baby up, and what we have is this. She came right up to ICE. It's pretty amazing, actually. You know, ICE is 2013, and we got to 220. But 2013 was the top of ICE. Yeah, basically the top of ICE. It looks like, oh no, on this counter trend bounce, it only went to 20112. So you got up there. And the first bar had the juice in it, but the second bar didn't. Now what we have is that now you have the bar down there at the 1986. Well, they look like they're pushing down. I mean, that's where you're going too. So.
Yeah. No, that's where they want to go, man. I mean, it's going to be wild watching this shake out. And our man Jay in the den, he already nailed this. This Dow, man, he's just taking apart this Dow. And what does happen, folks, okay, inside the Nadex product, you can trade the indices, you can trade the currencies, you can trade the commodities. I mean, it's all of the above. So it's it's a product that inside number one volatility, it's pretty wild. And as we go back to the Dow for a second, there's no doubt. Inside that Dow, if you want to see, there's only 2 Dow stocks, folks, okay, that are green. You have Visa, that's up $12. You have ExxonMobil up 49 cents, and Exxon's not going to hold. You have, now, bringing it down, you have Microsoft down 87 cents, Intel is off 65, Boeing is down 273, Home Depot's off 174. Ma Bell is the fourth leading stock, and that's down 4 cents. So bottom line is that when you get a setup like that, it's pretty neat. Inside the Dow, meaning that there's big weakness. Inside, now this one is the bizarre one, inside the NDX 100, because check this out. Inside the NDX 100, you get Amazon up $33. You got Biogen up.
They had their earnings come out last night.
Yeah,
yesterday.
You got Biogen up $36, right? We get Broadcom up 123, and you got Google up 15. Now, even with that context, so check this out. The futures, the NQs are down $10. Even with that, folks, guess what? Out of the NASDAQ 100, there's weakness extraordinaire underneath it, okay? Pace Car is the leader down 346. Monster.com's 340. Green Mountain's 367. And Citrix is 166. Bottom line is that if we go back to the S&Ps, I know I'm going fast, folks, okay, but you need fast fingers in this Nadex product anyway.
Ticking down, man.
Exactly. Okay, so let's see what we got. We got 10, 11. I guess in this context, you know, we're down 15 right now. You're going against the strength from 0930. So what I would do here is this, is that you'd wait for just a small bounce, folks. That's what you'd wait for, because in the last 20 minutes, we just went from 2012 to 2003. You're going against the 930 bar, which has 114,000 contracts on the way up. And you basically will sit here. We get an hour before we. That would be for the S&Ps. I'd sit here and wait. So let's go over, because what I'm looking for specifically, I'd look for a nice little bounce, and then you want to sell this thing somewhere about 2006. That's the way that would be set up right now. You match up. What I would be doing here is this: you'd match up the bounce with a top of the box inside the Nadex product, and what you'd be gunning for is that you're gunning for the 1982. That's we get a nice volume, high volume swing low down there. So it's a nice setup. The thing that just for the Bulls and the Bears out here today, what is absolutely amazing is that you can have the gap ups that we had and the market can't hold. That shows you just how much weakness that you actually have in this market. And it's amazing, man, because, you know, most of the time, normally what happens, folks, is that when you see that just the, let's say the opposite way, that if I saw the futures up, which happens many times, and this is always a great tactic. You see the futures up 20 or 30, and you see a couple stocks that are down 20 or 30. It's like, oh, see you later, man. You sell that thing so quick you can't see straight. You know, because your probability would be that, hey, guess what? You're going down. Well, the probability today, even though those futures were down so dramatically, the probability would be that, yeah, you should be able to go up. You know, so it's pretty cool as to how that thing whole shakes out. Because this bull-bear fight right now is showing that the Bears are in control. You know, that's my take. And I got claws back, folks.
Wait, you taking the side of the Bears? What are you talking about?
Yeah. I know. What am I talking about? Yeah, what's new, right? Yeah, I know.
Exactly.
I know. Seriously. So let's
okay. So we got some setups.
Yeah.
We're looking at a high volume break there, confirmation, right? A little bounce right there.
Yeah.
And it's like 2001.5, by the way, is a 0.7 deviation.
Is it? Okay.
That may make a good setup for bouncing there. Anyway, so looking at the 415s in the day, the best thing we got on the list right now, which isn't that bad actually, it's the 415 1975 to 2005 spread.
Okay, let me pull that up. Beautiful. And what we're doing, folks, is that if you happen to watch the Tiger TV, we're taking Darrell's analyzer. He has an amazing analyzer. And what it does, it's not going to tell you whether to go long or short. What it is going to do, though, is tell you probability-wise what is the best contract that you should be trading out here once you have your parameters set up. Okay, so there I am. Okay, good. Okay, let me have that one again, Darrell. 1 second. Okay, so I got the indices. I got the spreads. I got the 415, I got the U.S., I got the 415.
You got the 75 to 2005 spread.
Okay. 415. 75, hold it. I have the 80s to 260s. 1 second. What am I doing? 415. Oh, I got it. You get the 30. I got it. Oh, cool. Okay. So when you're doing that, folks, okay, there's two different 415. Now, see, this is cool. There's two different 415s. One's the 8 to 415. The other's daily 415. So what we're talking about is that we're talking about the 8 to 415.
Right. And what this will do, the scanner does, it puts all of them on the exact same place for you, so you don't have to worry about clicking back and forth.
Yes.
And so I just hit short. I hit, give me at least a 0.5 to 1 or better risk-reward ratio. And It's like, hey, if you want the lowest risk, that's going to give up a few points. So it really comes down to what our target is. So what would you say our target is going to be for
the target?
The S&P?
Well, you get, let's say if I take the top of the lows, 18 No, 1989. And this is where I'm going with this, folks. The low of yesterday was 1982. Now, the high of that low was the 1989. So when you want to be basically conservative, you say, okay, that's where it wants to go. Why? Because that's a high-volume spike. Now, what's also happening, though, is that if you just move over 2 bars, you're going to see at the low of that 1985, that was a high-volume spike on the way down. So it's like, hey, man, this can make it down to that top bar of the low, which is still, what, that's 15 points down from where we are.
Right, yeah. So it gives us a nice big move.
It is.
Finish strong down for the day here.
Right, and I see it right here. Okay, cool. Okay, so if I go there, oh yeah, that's a nice. Oh, so check that out. That's a nice deal, man. I see what you're saying. So you're getting out of the money a bit, but the reality is, folks, is that and that's not that bad. 1975, and I'm going for 1989, but the bottom is 82. So what you have here, folks, is that you could be risking $43, and the max would be making $257. But you're going to basically say, okay, the max on that is really about 180, maybe 200. Do you know what I'm saying?
Yeah, basically what you do is you look at where am I selling it at, where am I targeting. So if 2000, right now 2001, like let's say that if that was your entry price,
right.
Then if you go for 1989, you got 12 points right there.
Right.
So that's going to be $120 on a $40 risk. So not too bad, 3-to-1. You got a pretty similar ratio over here. If you sold a binary, a 1990 binary for $415,
okay,
you could sell that for $83, and it'd be at $50. Basically, once it hit 1989 after bid-ask spread,
yeah,
so you'd be looking about a $32.50 profit. So risking 17 to make 30, risking 40 to make 120. You're basically coming out the same thing. So as far as risk reward there.
And what's cool is that, we're 2005. So this market right now is going to get this little bounce. So what you want to do, you just hang tight. You let the baby do the deal, meaning you get that little bounce going. I know. How good is that, right? No, totally.
Yeah.
I want to shift gears for a second. We go over to that gold market, because what we had with gold yesterday, folks, is this. Gold, silver got absolutely smoked. I mean, toasted, roasted, all of the above. But yet, the gold equities and the silver equities did not. Now, the physical metal's going to have to get some juice, but guess what? We're getting it right now. So this is going to be interesting to see. The first spike up, basically stopped dead in its tracks at the 1267. But it had the juice behind the move. What we're going to see right here is that this is going to basically open the next 10-minute bar right at that 1267. So what that's saying is that gold is going to run to this 1271. It's going to be wild watching this whole baby shake out. You stay right there, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us. Dow Industrials right now down 81. Nasdaq's off 12. S&Ps are off 15.5. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling a problem with us out here. Right now, the Dow's off 89, Nasdaq's off 17, S&Ps are off 17. We got gold up 930. Let's stay with gold for a second. So, Darrell, let's look at that analyzer of yours. And when we're looking at gold, okay, so GCJ 5. Okay, so it's hammering against this 67 level. We just spiked into 66 again, can't handle it. So if I take the 67, the bottom is 59, yeah, it gives me, okay, so 71 is gain. That's the way I'm looking at this right now. So if we look at that, when you're pulling the scanner, right? I guess the question is, let's go into the spreads first. So if we go into the spreads first.
Targeting 71?
It's targeted 71, yeah. And I guess what does end up happening is that what I'd be looking for is the closest that we could get even on the spread to, what, 65 or 60 or something. Do you know what I'm saying?
We got tons of them at 65. That's not a problem.
Right.
So time for expiration?
Yeah, well, it's a 1:30. What happens on a Friday, all right? I mean, it's a 1:30 deal. Do you know what I'm saying?
Right. So that's going to put us at the 1260 to 1300 one. That'll put us a little bit further away. 1267.2.3 right there. But I mean, that's 1 point. If we're targeting 1270, you're talking about 3 points. That's $30. Probably not our best trade at a $70 risk.
No, it's not. So what would happen? So what happens with gold, folks, is that right now we could do a 10 to 12. We could do a 9 to 11. 9 to 11 is too quick. That's 34 minutes. 10 to 12. I see. 10 to 12, we get a 60. You get a 64.50, and you get a 66. Interesting.
Yeah, 1270 over on binary is $35. By the time that hit 1271, you're looking at a value of 53. Still not a great return on that one.
No, it's not.
So sort of close for what we're looking for.
Yeah, it is. No, and that's important to understand, folks, that in the context of what are you giving up, for this. But see, it's going to go right now. 1 second, hold it. I got to get this thing. 1266, 1266. So 1264. I'm buying one there. Yeah, that doesn't work. Okay. No, that doesn't work. I got to get onto the... What one did you find that's the best thus far if it's going to hit? 1266.
The best one I found for 130 is going to be the 1260 to 1300, but I don't like the risk reward. But we've already moved up really high from the floor and ceiling of all the spreads.
Yeah, I know.
On gold.
Right.
So that's why it's sort of we're slaying it off.
That makes a difference. Okay, then we should. Let me ask you this: if we go into the binaries, what would happen? 1 second.
If we go to the binaries, if we get a 130, we have a 1270. If you want to go a little earlier on expiration, you're out of expirations on the 12s.
Okay.
So we're already at 12. Like we have a 1266. I mean, we got a $48 one. By the time it gets there, it'll be worth 76. But basically, it's already pushed up to the high level of the binaries to the extremes on those. Okay,
so now now watch that. I'm going to shift gears on you again, folks. Then now what you do? Now let's go back to selling the dollar. So what happens here, folks? Check this out, folks. What you have here, as Darrell and I were doing this, right? You get the screens up. That to me, right now, buying gold or selling the dollar would be the same thing because the dollar has been at highs. Looks like it's been hanging up here in a big way, but when you're talking tick for tick inside this product, this Nadex product, it's dynamite because, you particularly, and this is absolutely proven after they, the franc basically, exploded up. Guess what? Whatever you trade is, that's it. That's your stop. That's all of the above, which is just one beautiful thing. So right now, if I wanted to sell or buy the euro or sell the dollar, it doesn't matter. The euro USD, if I bring that up, let's see, and I want one of these close now. So if I go to the 10 to 12 level, dealing with what 113 I'm dealing with, right? Yep. Hey, you stay right there, folks. Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us. Dow Industrials right now are down 88. You get the Nasdaq off 15. S&Ps are off 16. Gold's up 9.90. Silver's up 27 cents. The King bonds, folks, they're just going to the moon. Larry's going to be having a nice boat ride. We're going to be right back. Darrell and I are going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 134, Nasdaq's off 29, S&Ps are down 22, and you get it cracking lower, folks. We get gold up 1290 at 1269. She's going to hit in that 1270 right now. Bottom line is that let's go back to the S&Ps just for a second, because there's action here, folks, and this action is going to get heavier. So what you have in a marketplace, number one, that, you know, the Bulls and Bears are fighting it out. The Bears thus far have won. And what you have coming into a Friday afternoon, folks, is you're going to have a dumping here. Why? Because the volatility has been high on a continual basis. You know, if in fact they could have kept the market up today, bottom line is that, yeah, you could have ran into the close with buying. Just the opposite has happened here. And what you're going to see in the next few minutes is that we're going to be breaking the 1995 level here with volume. So we've already got into the highs of yesterday, I mean, in 1999. So what that puts, you know, game right now is this 1989, and the bottom is 1982. And you're going to see this quickly, because there's going to be no messing around on a Friday afternoon, a Friday morning rather. You know, so it's this volatility, man, is just wild. I mean,
I know, and it'll just like you have to be ready and you have to go. Like the second you see it, you just.
Well, what happens?
Like, once the setup's there, obviously, but yeah.
Once the setup's there, and folks, what happens is that yes, every bounce, bottom line is a gift from the trading gods. That's how this thing shakes out. And it's pretty amazing. I'd tell you, at the open this morning, it was amazing. I was looking, and one of the clues for sure was the IBB. What you had is that you had BIIB, okay, was up $34. It's still up $36. This tells you a lot. So check this out. Biogen is still up $36, folks, okay? And the biotech index couldn't make a new high. It missed it by 3 pennies, and that's selling off. That is saying there's huge distribution. That is not me and you selling, folks, even though we did sell it, okay? That is not that. That is monster operators unloading positions in a huge way, And this is the perfect day to do it, by the way, because when you have a Amazon that is up so heavily, when you have a Google that was down, and let's go to Google for a second. I want to see something. Because Google last night, it was down $15. Now it's up $15. And, it's like, okay, we'll see whether that baby can hold, because that's in a downtrend also. Amazon, bottom line, up big. That hasn't held. Oh, this is funny. Amazon couldn't take out the 340. No, it did take it out. Okay, it's 350.15. They took it out, but it's selling off from that particular point. So when you have that phenomena happening, there's someone on the other side of you with monster positions that are basically saying thank you also, and they're just selling it out. Inside that gold market, you're going to see something that is absolutely wild. If we start with Rango Resources, which is Rango, by the way, folks, okay, if you're in the gold or silver market, is a great stock to look at just to basically kind of stay straight. Rangold yesterday, okay, so Rangold's up 224 today. Yesterday it got down to a price point of 81.21, and the day before that was 82, so no big deal. But that was with gold down $30. Guess what? Rangold's going to basically go after its high today. That's an indication that the gold equities are in an ABC structure on the way up. The silver equities are in an ABC structure on the way up. The contract, okay, is going to have to basically build a bit of cause here, because when we did come down yesterday, it had some juice on the way down. It was lighter than the way that we went up. It was going into the swing point from January 15th and January 16th, and it was lighter. But when you still come down with an expansion of volume like that, you got to take that, it's like, okay, you're going to have to build some cause. The way this is still set up, though, this baby looks to me like it's a monster ABC structure on the way up. So it's going to be wild watching this whole thing shake out, because there's no doubt divergences are out here in an incredible way. You got to love it, man. I'm telling you.
I think we have a great setup. Like, it looks like it's coming down to sort of beating right there on that level.
Yeah.
Pulling back a little bit, and then looks like it's all the indices sort of doing a little bounce right there, right off a deviation level. But I think we have a lot of strength to go on down there.
This is good. Yeah. Let's talk about this, because there's no doubt. So watch this. Let's see. You're at 1039. So what we're talking about is that the S&P got down to 1995, rejecting that level. Now, this is where it gets cool, folks, okay? This is what you have. You're going to have, at the low out here today, a high volume low. So high volume low, the probability that it gets tested again is high. The probability in this one gets higher because of the way that we were trading yesterday. We have another high. So if you're a bear, you're basically praying right now that you get some kind of a bounce, because we haven't got a bounce. I mean, we were waiting for a bounce, 30 minutes ago when we got on. It went to all of 209 and never made it to 213.
Right.
So what you'd love right now, it just hit. So did it hit a full deviation, Darrell?
We had 1994.25 was a deviation.
Oh,
so
how
basically
cool
right
is that?
there.
So that's perfect. Okay. So when you're test driving Darrell's analyzer, folks, you'll see these deviation levels, and they're crucial to understand, because what you'll certainly not do is that it came down, and what's so cool about this is that you have a swing point and the deviation level is lined up with the swing point too. And that's really cool, folks, because you have something to judge it against. You always want to be judging it against something. It has to be going against something. It can't be in the middle of nowhere.
Right.
You know, and that's what you have.
Yeah, see, so right here on the screen, I mean, it's basically one deviation down right there is 1994.25. So we post those every evening right there at 8:30.
Look at that. That's amazing, actually. Isn't it? It's pretty crazy, man.
It's IV, man. It's the market telling us.
Yeah.
So,
right.
I just pull the implied volatility out of the S&P options and basically say what's a one-day move based on implied volatility's pricing and options. And it is day after day.
And there it is right there. So what you're looking for now is that you're looking for a nice little bounce. And you can just take the high of today, which is the 2012. The low is 1995. So that's a good price spread. There's no two ways about that. You're talking about... what, 12 and 5 is 17? No, it's more than that, right? Oh, I see. That's not the high of today. I'm taking the high of the open. What I would do is this. So watch this, folks. This is interesting. The high of today, okay, in the middle of the night was the 2020. But when you're doing a retracement intraday, you wouldn't want to take all the way up there. What I'd take right now is just the top of the 2012. The reason being, I can't picture you bouncing up to 2012. That'd be heaven if you did, man. But now what happens is that you get to 2007, it would be a field day. You know what I'm saying?
Right. Do you think we're going to do a big pullback in this process, or do you think we'll actually go through and break down through that deviation level?
No, I think we'll break down. I think it's nice and early in the morning. It's 10:42. It's definitely early enough that it can build some cause here to basically. It doesn't have to get to that low of that 1982, but the 1989 I think is game. That'll only be 6 points lighter than that first deviation. Do you know what I'm saying?
Right.
You know, and now this is how you get it, folks. Okay, this is how you bring the probability up. So the bounce is happening right now, and what you'd be looking for is you're looking for the bounce on dramatically lighter volume, and it wouldn't be lighter volume of how we just hit a low. We just hit that low with 62,000 contracts. What you look for is what bar you're going against, and we're only going against the 42,000 bar. You see what I'm saying? So what ends up happening there is that if, in fact, it's lighter than that, which is very hard to do, by the way, that's releasing more information to you that's how weak the market is. You know, so, and that's what it looks like. Now, we'll find out when it gets there, you know. And on this one here, you know, you could actually, it was kind of interesting here because of the way that we just came down to. You could scale into this. You could lay into this at 2003, and then lay into this at 200, the next bar, 2005.75. That would be the way that, in fact, that's what I'm going to probably do. And the reason being is that the weakness is already shown out here. The weakness is basically shown. You have that now we have a high volume spike bar at 10:30, which is cool because the high volume spike bar from yesterday, that's probability wise is not as big as the probability being out here today. So volatility in spades, you gotta love it, man.
Got the setup.
Yep, and here goes gold. So those correlations, so watch, folks, okay? The correlation inside gold, we're going to hit the 1970 in a heartbeat. And we're at 1269.20 right now. And let's see, so we're at 4. Oh, this is really sweet. Check this out. You're only at 4 minutes, and you get 6 more minutes left. This is going to do some juice, too. You're at 26,000 contracts, 2,600 contracts. Yeah, so it's going to have like 5,000 contracts, which is not bad. It's not great, but it's not bad. It's enough to basically jam it into this 70. And now, if you get it, this is where it's going to get really wild. So we have a Friday, folks, and Friday inside the gold market. If they're jamming it higher, you can get a lot higher. You're going lower, forget it, man. They can toast this market in 2 seconds, meaning the metals market. The phenomena today is they're going to jam it higher. The key is when we get to this 70 and 71, if you build cause for maybe 20, 30, 40 minutes, it'll be really interesting to see, can they really actually jam it to 84? You know, I don't see that happening out here, but you get a better indication of it when it gets into that 70, 71. Because if we do get the volume, which it looks like we're going to get, if we get over 5,000 on this 10-minute bar, there's going to be some action there, man. So,
well, let's see here. I'm looking over at the 10-minute bars with you.
Yes.
And now the 10-minute bars on the S&P.
Okay. Yes. Yep. Go ahead.
So basically, what you're looking at, just to catch everybody up, is I'm trying to get my bars to be more visible here. Right there, we had that high volume bar right there. You said at what? Which one were you focusing on specifically on the S&P? I mean, we had the
on the way down
930. We had the high volume. Then on the way back down, we had decent volume right now, about 1040. So
that's right. So watch. So at 1030. We got a spike low at 1995.75, and we know that the deviation level, folks, was 1974.75. Okay, so that's as good as you. I mean, no, you can hit it to the point which we have seen, but that is awesome. Okay, so now on the way up, what I'm looking for is going against, and all I'm doing is I'm taking the tops of those two other bars, right? So let's say the 2005.75 would be beautiful if you were there with less than 42,000 contracts. And thus far, we've done 30. That, to me, would be saying, hey, man, okay, I like that area right there. I'd sell the heck out of it at that area.
okay.
You know, and I would, and what you're hearing is that, the spike up there, is all the way up to the 12 area, 2012, but I just don't think we're going to make it up there. I mean, that's what it comes down to. So it'll be getting a trade on. So you just come to the first level. We're right there right now. The first level is the 03. Here is 04. Oh, this is good. So check this out. This will get even more bizarre. Well, this would be nice. Okay, we're 8 minutes into it. And if you could spike it right now and then let the next bar go, but right now it wouldn't have the juice, because the move is like, it has the price spread going. We get 6 S&P points we've just gone, but you don't have that volume going, and we're not even taking a high volume bar. We're taking the bar that it's going against, which is really only a 42,000 bar, which is pretty cool. So, let's see.
So, because this bar right here that we're talking about had like 80,000 on it.
That's right, and that is
on the low of that. So
that's right, and that was the. At 0930, that was the strength that's going up, folks. Okay, so what happened? So watch how you measure this. The 0930, that was the first initial jump in the marketplace, right? So what you can do is you can say, okay, that was the strength in the marketplace. Now we know at 1030 we came down. You came down with some juice. You can take this bar here that you're going up, and what is the correlation? Does it have as much juice? Does it have as much power as it did prior? No. What happens is that each and every one get weaker. So what you also want to do is this. Picture it. You're running, you're swimming, you're doing anything like that. It's the market's the same thing. It's all it is, folks. It's energy going up and energy going down. If it expends its energy too much, too fast, guess what? Dead on the water.
Sweet. So basically just expending energy too fast by a big move on low volume.
Yeah, exactly.
There you go.
Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us, folks. You stay right there. Our man, Mr. Basil Chapman's going to be coming up in another 10 minutes. Dow Industrials right now down 84. Nasdaq's off 16. S&Ps are off 15.5. Gold, it hit it. There we go. 1270, up 14 bucks. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling a problem with us out here. And if you haven't test drove that Nadex platform, folks, get over there and do it. And you know what? You don't have to basically trade with lots of money, folks. You can be putting up $25, $30 a trade. And please do not, when you go out there the first couple times and do it, even after paper and you put up the real money, just because it's $25, don't go buy 10 of them at the beginning. Because if you do, and you win, then what's going to happen is that you're going to go over your head very quickly. And you'll have swings that are in the thousands of dollars. But if you start out slower, you're going to be a lot better. And yes, you did hear me correctly the first time, folks, because what happens is that if you're out there and you win the first time versus losing the first time, it is actually bad for your psyche, because you're going to have the King Kong complex.
Exactly. You think you're the trading god?
Yeah, totally. Because it's insane. I mean, Darrell knows it. I know it. A lot of people that trade that know it. And it's really cool because you want to think on a continual basis about probability. That's all you want to think about, folks. And the rest of it will basically shake out. But if you think about the probability of how it shakes out, you know, you're going to be fine and you're going to risk a lot less money. And I'd suggest that, you know, as you're out there, you know, we talked about the S&P, we talked about gold, we were getting into the dollar. I'd be selling the dollar every single time you can sell it, folks, okay? Buying the euro, you know, because if you get a larger trend correctly, what you're going to see is inside that platform, the premiums inside those right now are lower, and it's because no one wants them to. You know what I mean? That comes into play. You know, so, you know, we'll see whether I'm going to be on the right side of the trend of that one. But my take is this dollar is topped out. It just can't handle it up here, you know. So it's going to be interesting watching how this whole thing does shake out. You know, gold, you know, we're at that 1271. It looks like, let's just go see if it wants to. See, it has enough time to basically GCJ.
Make it happen over there.
Yeah, it does. It has enough time. Because if it ever gets up another $10, it will blow some minds. Let me just see something for a second. So if I take the last two bars are fine. Okay, so would you like, if you're a gold bull, folks, would you actually want to do? Would you want to see gold go sideways for another 30 minutes or something? You get that 30-minute move sideways and it doesn't back off, you'll get the spike. You know, it'll spike into the close because what you'll have is that because of the way the gold moved yesterday, there's plenty of people that are short the gold market right now, and they're not going to want to be short over the weekend. You know, so they'll. This is a good setup, man. In fact, this is a dynamite set. Let me just see something. So you get 71, you get 52, so that's 1291. Let me see where that is. 1291 would be the actual next move. If this can make a move right now. Oh, well, that makes sense, because the highs up there is 1308. Yeah, 1291 would make sense. What would be really cool, folks, inside that market is that if it could close today at 1276.60 or higher, because what that would do, it would get it inside the larger range, which is pretty amazing. You know, it's really amazing after what happened yesterday in the actual metals, in the physical metals. It certainly didn't happen inside the equities. Hey, Darrell, thank you so much, man.
Hey, good stuff, man. We're pushing on that deviation. We'll see if it breaks on down now.
That deviation's where it's at, man. Don't forget, folks, once you bring up the platform, come over to our website. You can test drive Darrell's Analyzer. And, of course, every Tuesday, Thursday, great show, 1 o'clock. You stay right there, man. Mr. Basil Chapman's coming up. Nico Page, Dave White. I'll be back this afternoon. Have a great weekend. Have a safe weekend. Stay right there. Basil's coming right up, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.